Take a look at this important story that's coming in from the United States on geopolitical matters. Well, the U.S. Treasury is preparing what the Treasury Secretary Scott Bessent has called an economic D-Day against Iran, with the toughest of sanctions in history expected to target Iran's trading partners. And in fact, what we're given to understand is that these sanctions will be announced, these economic measures that the United States is preparing and planning for Iran. They will be announced at a press conference which will be held by Treasury Secretary Scott Bessent at 2 p.m. EDT. And in fact, this economic D-Day and economic sanctions, remember, this is been spoken about by President Donald Trump himself. And in fact, Mr. Bessent has earlier said that this is going to be the greatest financial offensive ever marshaled against an adversary. And in fact, he was of the opinion that there's not going to be any military conflict, but economic sanctions. And of course, we do know that Washington is looking at imposing these restrictions or imposing these economic measures against countries which it thinks are supporting Iran. So either economic help or financial help. If countries are trying to help Iran, then of course those sanctions are going to impact them as well. And in fact, Iran has retaliated. China has also retaliated. China has said that this is not the way to go forward. And of course, diplomacy should be pursued for resolution of all the matters. And this is going to complicate matters further. But the Iranian side, the Iranian government has shot back and they have threatened that not a drop of oil will flow if economic war continues. So, of course, you do have tensions, escalating tensions that are currently mounting between the United States and Iran. Iran calling these proposed measures as illegal and inhumane. And of course, those threats that are coming in to shut all oil exports from the Gulf. So, of course, it remains to be seen what these measures are, not just for Iran, but of course, how much of their impact is going to be on countries that trade with Iran. And remember, India also does some trade with Iran. Jude, so that's the big geopolitical story that's playing out, and we will be keeping a close watch on how that really unfolds. But in the meantime, let's also take a look at how the markets fared today.
Well, absolutely, Sumitavan, as observers and stakeholders wait with bated breath on what the fallout of those proposed economic sanctions are. The Nifty here in India closed above the 24,200 marker. Broader markets ended mixed. In fact, banks dragged the benchmarks lower, even as metals and realty stocks more or less bucked the trend. Hindalco and JSW Steel were among the top gainers on the Nifty today. And Snehi is here, as always, with her market roundup.
Well, yes, overall a very tepid start to the week because we've seen some cuts coming in on the Nifty, about 0.1% lower. So while the cuts are not that steep, remember we've slipped below the 24,250 mark, and 24,219 to be precise is where we've shut shop for Monday. And we've seen similar cuts coming in on the Sensex too, 0.2% lower over there. The broader end of the market, however, which was cheerful for most part of the day, also saw a very sharp pullback. And in fact, the Nifty small cap index slumped all the way to 0.2% cut in the red. The Nifty mid-cap has ended absolutely flat. While we started off pretty decently, we saw a slump and we've seen a mild recovery from the day's low. Nonetheless, we've not been able to hold on to the 24,250 mark. Now, if I have to take a look at what's happened sectorally, it's a mixed bag coming in because while on one hand, you've got Nifty Metal, that's the top sectoral gainer with gains of about close to 2% over there. You've seen a good move on Welspun Corp yet again, SAIL, JSW Steel, Hindalco, NALCO. On the back of the mines and minerals regulation, all of these stocks have done well, followed by realty, energy, IT, oil and gas, and FMCG was absolutely flat. On the flip side, the sector under the most pressure was Nifty Defense, about a 1% cut on the overall index, led lower by MTAR Tech, Data Patterns, HL, Mishra Dhatu, as well as Zentech. Other than that, we've seen cuts in PSU banks, media, bank, finance, autos, and pharma was absolutely flat. This is what the tilt of the market was in terms of sectors. In terms of the market breadth, the tilt was slightly towards the declines because we had 285 stocks in the red and the rest in the green from the Nifty 500, with the biggest cuts coming in BLS International on the back of that Schengen visa issue, about 11% lower over there. Balrampur Chini 6.25% lower on the back of the news that the government is going to be curbing prices, and that's been negative negative for sugar. Aegis Logistics, Schneider Electric, Carborundum, Godrej Industries, 5-Star Finance, all of these are some of the top losers. On the flip side, Vishal Mega Mart on the back of the extension of MD and CEO's term for 5 years did very well. Morgan Stanley was also bullish on that one. IDBI Bank, LT Foods and KRBL rice stocks have done well on account of prices staying firm. Muthoot Finance, Urban Company on the back of yet another initiation coming in, this time from the house of MK. Lots of stocks were abuzz, but yes, these are some of the highlights. But all in all, it's been a tepid start. 0.1% lower for the Nifty is how we've shut shop.